start the backup recording.
All right, that looks pretty good, huh?
I'm not looking actually at your
I was
screen.
hoping somebody else would share their insight. I think it looks good. It's got your screen and then it's got the people down at the bottom.
Okay. All right. Well, are we expecting more folks or are we ready to rock?
I mean, I always give people a few minutes
Yeah.
just to, you know, couple of minutes.
Okay.
What
We can do that. Let's see what price action has done today. We have gone from 63.25 to 63.74, so 50 points. Pretty. I don't know if you call that big move or I mean, obviously there was a big move here, but my put's in the toilet. But anyway,
it's
uh,
been a weird day, huh?
yes, it has. The morning just didn't have hardly any activity at all until this 10:30 candle came out.
Which
we were,
is the EIA crude report.
yeah, we were looking at yeah, crude came in really on the negative side because I think it said it was minus 3 million barrels against an expectation of zero change, and the market's really reacted to that. What did crude
And then
do?
we've had Trump news all day, tariff talks and all that
Uh,
sort of stuff.
you would think the markets would have settled down and figured this out by now. Whatever.
He keeps saying he's not Taco Man, but he keeps bowing down and submitting and pushing back his threat timelines. And I'm not complaining. We really don't want to see a lot of these nations get 60% tariffs, but he he keeps backing it off.
My brother-in-law came by today, needed me to scan some documents for him, and he's one of these that has Trump derangement syndrome. And it doesn't matter if Trump caught the nuclear bomb that Russia sent after us, and he caught it in the field and kept saved the entire United States. He's still wrong. And I'm like, I don't care if somebody's a Democrat or a Republican. I just want you to be objective and not have your head up your ass about, when Obama was in, Republicans tore at him. When Bush was in, Democrats tore at him, and blah blah blah. You know, just know you just just realize that they're all messed up, in my opinion.
Yeah, I mean, they are all crooked. Otherwise, they wouldn't be politicians,
Yeah,
right?
exactly. That's
They
my opinion.
they had yeah, they had to be shady to get their position. So, but I agree with you. I don't care what side you're on. Just uh be an adult,
Being
right?
objective, be objective. Yeah,
Yeah, be an adult. Try to have reasonable adult communication with other people, instead of just flat out saying you're wrong and I'm right and we're
yeah.
all going crazy.
So, all right. Well, it's a few minutes after it's
Yeah, we're good.
2:05, so let's go ahead and get started here. We're doing a split today. I'm going to lead the first part here as I'm going to talk a little bit about some trading strategy stuff due to some questions in the chat from this morning. And then Signet's going to kick in and he's going to do market commentary and options, which he's really good at doing. Pardon, trying to clear my throat here. That peanut butter sandwich has left me a little gummed up here. Anyway, all right.
Peanut butter.
Yeah, that's another thing that just baffles me is why do we have so many food allergies all of a sudden in the last 5, 10 years? Nobody had food allergies when I was a kid. And now everybody's got some kind of a food allergy thing. I'm like, what the heck? Anyway, all right. We're going to kick off here. I'm going to minimize you for the moment, and we're going to look at what is called. Now, this is something that Jeremy did a lot of, some linear regression stuff with his famous fan lines. In the beginning, his fan lines were divided based on highs and lows, and then he would split them and stuff like that. But then he found linear regression, and he got all excited about it. And I remember thinking, Jeremy, if you talk about linear regression one more time today, because he got excited about it. But at any rate, but there is something to be said about it. So what is linear regression and what is standard deviation trading? So the idea of linear regression, and Signet, jump in here too. If I say something wrong or you want to throw in some color commentary or whatever, feel free. This is not a monologue. Linear regression plots essentially is like a moving average. It's like a moving average there, and the idea is though is it shows the line is the center of where all the trading has been for the period that you are sampling. Now, this particular indicator here, you can do, there are indicators built into TradingView for linear regression and standard deviation, but they're straight horizontal hard lines, and I did not like those. So I had, I changed mine through a little assistance with ChatGPT or Grok or somebody, I don't know, to show me the historical of it, not just where it stands at a particular point at the current point in time. And the benefit to moving to these curved lines is I can see the expansion and the contraction of the ranges. And that, because that tells us a lot. When we see compression, that's a spring that's being coiled up, ready for a move. It's kind of like the TTM squeeze in the same concept, in that you're similar concept. I won't go into the technicals of that, but so that's not our topic here. But generally speaking, linear regression, in this case here, I am sampling, bring up my numbers here, on a 60 period. Now, I like the number 60 because there's 60 minutes in an hour. It works on the 5-minute for giving us a, because there's 12 5-minutes in an hour, so that gives me 5 hours on the 5-minute chart. It works on the 15, so it works really well on the 1, the 5, and the 15-minute chart as far as time division goes. And it works on the 30 as well. Now, the first range, the reds, I'm going to explain the chart and then I'll explain how it works. The reds here are a half of a standard deviation above and below the linear regression line. In theory, 68%, if you're a statistician, I'm going to go ahead and say 68 so the statistician people don't, 68% of the trades should happen between these two red lines, in theory. Now, when price begins to expand, though, we will see, though, that the lines take, because it's 60 period look back, they take time to expand to reflect that, but that's the theory initially. So I could pick a much shorter time period to see that those lines tighten up better with it. But the reason we're going to go with the longer time period is I'm looking for more of a trend than I am a 2-point scalp. Nothing wrong with a 2-point scalp if that's your trading style, but I'm looking more for the overall trend, so I'm looking at a longer period back. The green lines are our 1 full standard deviation above and below. Now, in generally speaking, that would mean that 95% of your trades should be between these two lines. Actually, well, whatever. I'm not going to split hairs over the deviations and all, but then 1.5 for the blue, and then the grays are 2.0 standard deviations above and below. When you use this kind of trading, first of all, the theory of the trading is that we always run home to mama. We come back to the linear regression line. As you can see over here on the this chart here, we broke out, we came back. We broke down, we came back. We rode up for a while, we came back. The also at the same time, the idea is that if you move real far to one side of the linear regression line, there's a good chance you're going to move to the other corresponding color or deviation band on the other side. Now, it kind of depends on a trend. Like since we see an upward trend here, and we've been writing the gray line, let me zoom in a little bit on that. So now, we've been writing this gray line here. So we come back here, but because this has been so bullish, I don't expect it to come all the way back down here just on the linear regression because, but I do expect it to come back maybe half to the green line. We can kind of see we're hitting around. We haven't hit it yet. We definitely hit the red line, but it would be fair to say that we can expect maybe a half. If we say this is 2 deviations out, I could expect maybe 1 deviation back on the other side because the trend is still bullish. So, okay. If we're in chop, I would expect it to go from gray to gray or blue to blue. So again, Signet talks a lot about know what kind of day you're in. And in here where we seem to be trending, then I'm going to stay with the bullish play and I'm going to stay with, I'm not going to expect a full ping pong from one side all the way to the other because we are trending. If we were chop, yes, I could expect that to happen. As important, and I'll talk about the actual trade here in a second, but as important to this 5-minute chart is this 30-minute chart. The 30-minute chart gives us the direction, the trade direction. The 5-minute is the entry. And it's important to understand that, and that's partially because the 5-minute, like an ocean wave, is going to look like this, you see. Down, up, down, up. Why? Because it's a shorter time period of time, so it's more volatile to these changes. When we look at the 30-minute, though, it went down, and then it's just gone up. So there was one course direction change over here. Over here, on the other hand, we had a lot of ups and downs and ups and downs. So we want to look at the 30-minute for the trade. And when I see something of interest over on the 30-minute, I come looking over on the right for the entry. Now, why is the entry so important? Excuse me. The entry is so important because there's 2 very key important things why the entry is very important. 1, your profit is not made on your exit. Your profit is made on your entry, because if you get a better entry at the same exit, you make more profit. So learning the entry, if you got, because we still have got certain targets. Look over here on the left. Right there's the target. Right there. That's the target for this particular trade. And, you can see we're approaching it. So the exit point is the same. But where you get into the trade changes everything about how profitable your trade is. And so we want a very nice entry as best we can. The second thing to understand is that it dictates also where your stop loss goes. And I don't want a wide stop loss if I can avoid it. So when we consider that, a good entry also means a tighter stop. So the trade again is here on the 30-minute, let's say, or whatever time period. You want some gap between these 2 time periods. Here we got a 5 and we got a 30. Well, that's a multiple of 6, right? 5 goes into 36 times. What I don't want is a 15, because that's just a multiple of 3, and that's really not showing me the trend so much. So, I could do the 1 minute and the, you say, could you do the 1 and the 15? Absolutely. Could you do the 1 and the 5? You can, but it's not as clear. We don't have as much clarity between the two time zones there. Just to kind of show you, let's just do it over here. And if I do this, and we'll draw this in like this, and I set this on the 5, and I draw this in. Let's try and get about the same. Where am I? Okay. All right. So we need to go to about here. All right. So here we see, because these time periods are so close to one another, I really don't see, I don't have as good a picture here as if I'd have moved this to the 10. The 10's a lot more clear, and a lot of people are like, 10, nobody uses the 10. Well, nobody says you have to use any number. I know some people use a 13 because it's a Fibonacci number. And, that's fine. Whatever. But at any rate, we want some separation in the time periods. All right, so let's talk about the trade ideas. We say that, we talk about that. I've said that all trading systems work sometimes. Not all trading strategies work all the time. You have to learn to master your trading strategy and consider context. So here I've got a trend line. And we have, as you can see, we're reacting to that trend line. Now, generally speaking, what I would like to see for a bullish move here is a comeback and a touch on this over here on the left, this linear regression line. Ideally, I'd love to see a pullback down to here to a half. And I might be looking for targets in here, like fair value gaps. There are not any fair value gaps until we get way, there's a tiny one right there. I don't expect that much of a pullback. So I have to say, well, where's my pullback going to occur? Now, since we really don't have any pullback targets here, unless you want to consider some of these breakers or blockers or broken noses or whatever you call these things, we have to say, okay, then where's the pullback? Well, the pullback's the trend line. Now, eventually, this linear regression line will catch up, and it probably will tag it. And if it tags it, I'm going to look over here to the right. If I think this trade is still bullish at that point, and I think that the reversal point is going to be on that linear regression line, because now that linear regression line is above the trend line, now I've got a target, a pullback target. So if we can get a pullback somewhere in here, then I come over here and I start looking over here. And I'm looking for a pullback over here too, if I can find it. And if I can find that pullback over here, then yeah, I say, okay, I'm going to take a long. But I'm going to wait until I get, it depends on how much confirmation you want, how tight you want your stop loss to be. But this is bullish on the left, so I'm only looking for bullish trades. There is an argument to be said you could take a trade back to regression. Nothing wrong with that trade, because that's a really good trade. Let's take a look at that, because what have we got here? We've got a rally candle, a base, possibly a drop. Now let me zoom in on this right here. If we do this rally base drop concept, it's got to break the low of this red candle, which is 6370.75. If you're looking for that U reversal, again, ideally, if I see that forming, I'm saying, okay, where do I get in? I would get in, be looking for the rejection right here on this linear regression, and my targets, 1 or 2 standard deviations, or these lows over here. So you can do, if you're a Bollinger Band trader, These are the kind of trades that you actually look to do. You're looking for this trade that is outside going back to the middle. That's the way a lot of Bollinger Band people like to trade. If you're linear regression, you're looking for the pullback that is against the direction so that you can take the trade in the direction. So I hope that helps some people there with that particular setup there. If anybody's got any questions, this is an open channel. You can voice in or you can type in. But so you've got two different ways you can play this. You can play for the move back to the middle, or you can wait for the pullback against the trend and look to get in somewhere in there and go, in this case here, bullish. I see these levels right here. And so if we come back and we take that out, well, that puts me below that half deviation level. I could take a long based on that, a little risky, but then I know that my stop is going to be just on the other side of that full deviation band. Okay. So that's that one there. Like I said, anybody's welcome to ask questions or anything like that if you're interested in that. So two ways to trade that: the pullback against the trend or the trade back to the linear regression. All right. Give a quick second if anybody wants to jump in on the voice. If not, we'll move on. Okay. Did I hear somebody?
Yeah, I'll catch you there for a second. Just
Yeah.
one question I always get with these linear regressions of any kind is how the multiple time frames really gets people screwed up, and they think that there's a right one and a wrong one.
The multiple time frame, the way I use it, is the higher time frame is the trend. And that tells me the direction I'm going to take. In this case, I would only take a remember I said there's two ways you could trade this. You can trade this back to the mean, or you can wait for the pullback. So if you're waiting for the pullback, in this case here, I'm only looking to take a bullish trade because the higher time frame is bullish. This one over here is just simply helping me with my entries. These are the bands I'm looking over here as far as where my entries might be. And I'm simply playing a statistics game over here. But again, in context, I'm looking at this low right here. If this chart is going to break down, it's going to break down on this low right here, which would tell me now that this half deviation band is above it, I would be looking now for this green. So if I'm looking for a pullback to go long, ideally I'd like to see the pullback on the higher time frame first, quite frankly. Then I'm going to come over to my chart on the right, and I'm going to be looking for at the standard deviation bands here to say, okay, where's the right place to get in? And that's just a matter of your risk management there. Now, if you're trading against counter trend trading and you're going for against the mean or back to the mean, then I would be looking for like this candle right here that went way out of bounds, and then I'm looking for the short to go back over here to the linear regression. Both of them are valid trades. Does that clarify things there, Signet, as far as, I mean, I know you know what it is, but was my answer right as far as explaining it to folks?
Yeah, I think you got it. You also said something else that reminded me
Mm-hmm.
of a question. It was I'm a big fan of reciprocation. So that big pop that you pointed out there right towards the end. Yeah. Do you expect reciprocation of the same length and distance to the other side?
Not necessarily, because we're in a bullish trend. So I would
So
expect to see
you see
some.
the bottom side? The
See what?
bottom side down lower to your left? Look at left, left. Keep going left. Yeah, right there.
Yeah.
That was the first one, and then the second one was your reciprocation.
Yeah.
That was the reciprocation from the
Yeah.
first
That's
push.
true. I didn't see that. I'm glad you pointed that out. So here we hit. This was a good pullback to go long in a bullish trade. Outstandingly good call. And that would have been, yeah, you're absolutely right here, because that went from 65 to 74. That was 8-9 points right there. Good trade, really good trade. I didn't even see that. So thank you. Yes. So there's a perfect example of, and if we cast our eyes, as I've got my mouse on the right, but cast your eyes over to the left, and you may be able to see this, you may not, but you see where my mouse is. It's that trend line. It's that blue trend line. Right in here is where this pullback was. And I tell you, folks, over and over, if you don't think that a trend line carries any weight, watch the time and sales. When a ticker comes and hits a trend line, time and sales oftentimes will simply explode because the algos see it. And algos and all the different institution algos suddenly wake up and start fighting over that trend, what to do with that trend line. So you'll definitely see a lot of activity every time we touch it, and you can see there's a lot of chop here with these long wicks. So, all right. Any other questions? Okay. Let's move on then to auction market theory. And I'm just going to park these over here out of the way as much as I can. I will tell you that auction market theory makes an incredible amount of sense, but there's one caveat. You end up with wider stops a lot of times doing auction market theory. So if you're wanting to trade the ES, you need to drop down to the MES. And you need to drop down the MNQs or whatever. Here's the idea. Auction market theory simply says then when you go to the grocery store and your favorite pack of cookies is on sale, you have a tendency to buy more of them. That's all it says. And when they say, but when you go into the store and your favorite pack of cookies is price is up 20%, you have a tendency to walk past it, right? It is the idea that the same idea applies in the market because people like certain prices for whatever reason. We don't necessarily know the reason. We just see it in the chart. So let's talk about volume, and let me I'm going to add both of these volumes in here. Most of us were brought up to look down here. Like I say, most of us were brought up, and a lot of times when you first launch a new chart, they just automatically put volume down here for you and say, oh, this is incredibly important to study. We simply must study this. Yes, it is very important. However, it's important to understand the difference between what's down here and what's over here. This is volume by time. This is how much volume happened in the 9:30 candle. All right. Over here on the right is volume by price, and this is the price that people spent. Wrong phrase. More contracts were traded at this price for the time period I'm sampling than anywhere else. And that's what's the important part to understand. You say, well, what's the significance of it? Well, the significance is that if we're near it, we have a tendency to gravitate towards it. In other words, if price was, say, right here, there's a very good chance that price would drift and come right back down to this volume node. So we call these volume nodes. So here's a volume node. Here's a volume node. Now, we will also say that since this volume node here is the biggest one on the chart, this line right here is called the volume point of control. Not to be confused with Signet's morning report. They're both VPOC, but his stands for Virgin Point of Control. meaning that within this day, we have not come back down to this point and touched it again. Usually we're looking at that from a prior day. So in a virgin point of control, we have this chart for each individual day. And if today we have not come back and touched yesterday's volume point of control, we call that a virgin point of control. However, when I am looking at just the overall volume, here's the day break right here. So I'm going to slide this right there. This is just today's volume. This line now stands for volume point of control. So just be careful of that. It's a little bit different from Signet's morning report. Just be aware of the difference there and know the context of what's going on. Signet, am I correct in that description of your virgin point of control?
Yeah, untouched.
Okay.
Now, there's some
Yes.
caveats to that. If I know some traders who say it doesn't count if it was touched in the pre-market. It only counts if it was touched in the middle of the day. And that solves the problem of us opening up at 6 p.m. and spiking right into the 4 p.m. close,
Mm-hmm.
right? So that's where the point of control happened to be. And then we say, oh, well, it was touched. So they say, well, if it wasn't touched in the regular trading hours, I won't count it. Me, I don't get that nuanced with it. If it's been touched, it's been touched. But I see their logic, right? Because
Yeah.
if most of the trading counts in the regular trading hours, then counting it after hours is counting the minority rather than the majority, and we shouldn't do that. But I don't get that hung up on it. If it's been hit, it's been hit.
And by the same token, if you look at volume by time, you can see that there is no volume down here. So it really doesn't matter in that regard there how substantial it was until market opens. That's one way you can look at it. But in the end, it doesn't matter which you choose as long as you understand your choice. It was touched, or it has to be in regular trading hours. Doesn't matter which you choose, so long as you stick with it and you understand how to trade it. It really doesn't matter, in my opinion. Humble but accurate. The All right. Now this is called the visible range profile. We find it if we go here to Trading View and we type visible. Or you can also type in VRVP, visible range volume profile. It means visible because it's only what's on the chart now. So you can see these two little nodes here. And if I draw this chart back in, I look back several days, and we give it a moment, see how it changes? Because it changes based on what's on the chart. Now, there's different studies that you can find that group it at each day, and they stop the clock at each trading day, and they start it back up 6 p.m. and all that kind of stuff, and group the volume. At any rate, auction market theory says people will go to where they like the price the best. Now, these dotted lines is called the developing volume point of control. And what that means is I'm going to open this up here and I'm going to go to the visible range volume profile and I'm going to go to style. The solid yellow line is the point of control. The developing point of control here is the dotted line. And what that means is at this time, this is where the point of control was. So this is historical. So I might say, okay, well, let's draw a reference line here. And at 7 o'clock this morning, this is where it was. Now, if we were to turn bearish, well, where would we go? We would very likely head towards this point of control because everybody really, really liked it, this price, up until about 1:30. This was the price where more contracts were traded from, I think that line started here around, what would we say, 7 or something like that, for a period of time, there were more contracts traded at this price. So if we get near it, people are going to trade this, going to want to trade that price again because that was the price earlier today. This was the overnight price that everybody really liked. Okay. So just like I said, if you go to the grocery store and your pack of cookies there is discounted or at your average favorite price, you have a tendency to pick it up. If it's not right, well, then if it's too high, well, you have a tendency to take a pass on it. You say, well, why wouldn't it just go lower and lower and lower? Because people want lower prices. Yeah, but at some point the sellers are going to say, I'm not going to take but so little for this. They're in this to make a profit as well, and they're not willing to give up their shares for a certain amount or their contracts, but for a certain amount minimum, and so they put a floor in here, so I'm not going any lower. So we've got too low, too high, somewhere in the middle, right? And so price has a tendency to gravitate towards these. All right. Now, the way I like to mark them up myself, and let me get rid of this. I think there's another line there. This. Come here. Go away. There. And there. Okay. Oops. I went too far. I like to look at, so here's today. Here's, what's today? Wednesday. This is Tuesday. Here's Monday. Here's Friday. Let's just go that far back. What I'm going to do here is I'm going to map out the volume, the developing volume lines from these days. And that becomes a lot of my targets if I were doing auction market theory. So, for example, and the damn robot just started off, Swanee, the vacuum cleaner. Okay. Once it comes over this way here, I'll, flip it or something. Here's one. I'm just going to work my way from the bottom up. Boom. Here's one. Right there. Okay. Let's just go up. Here's where we are right now. There's that line. Oh, wait. There's one over here. Come here, thing. Hang on. No, shut up. Let's look right over here. We kind of see it somewhere in this area right here. There's some a little high, some a little low. All right. We see one kind of in this area. Now, I want you to understand that a volume profile is an area number, not a to the tick. When we talk about numbers that are to the tick, that's going to be like prior day high, prior day low, pre-market highs, pre-market lows. Those are to the tick. When we pivot points, a lot of times to the tick. When we talk about volume, that means this area. Because again, notice that it's not just one line here. Notice how it's kind of a cone shaped here. It's an area. All right. Now, I don't have any more pricing up here because we're on the ES. Maybe I do on gold. Let's take a look at gold real quick. Oh. Yeah, actually, I can do that. We'll go over here. Alt click. Whoops. Alt click. I learned that the other day from somebody over here. And we're going to put this on the 30-minute. Give that a second. Today, Tuesday, Monday, we'll do Friday. Actually, I've already marked this chart. Let me delete all those. Today, Tuesday, Monday, and Friday. Give that a second to update. All right. Notice the gold's up near the top. But if I... There. I've got some action up here. There. You see that? I've got an upside target. At some point in the past, now, at some point in the past, that was like an incredibly favored price. Now, this concept of, oh, this is the favored price, it does lose its power as we go back in time, I believe. But right here, but you'd be amazed of how long some of this kind of stuff will last and stick with us. All right. And as I zoom in, a lot of times we will see some changes in the volume profile, like right there. You see that? It changes a little bit because this is from a higher time frame, but since I've zoomed in, we've got some new levels right here. Like so. All right. So now let's take a look at what we're doing with our price action. And so, was it respected? Came up, volume. Here, came down, volume, up, volume, down, volume, up, volume, down, volume, up, broke, came back to. Broke out again, came back to it. Broke down. Oops, sorry. Chop on it. Tried again, chop on it. Broke down, came back to it. So you can see that volume profiling makes for really nice targets, but this is more of an exit strategy than it is an entry. You still got to have an entry to get into this, unless you think you want to move between volume nodes. Now let me see. Let me go back over to the ES because I think it had, yeah. Notice we've got a volume node here and down here. These two are pretty pronounced. But you notice this void right here. And that means, that tells us that's a price area where nobody was interested in that price. So typically what we'll see happen then is if this were to break south of this volume node area, it oftentimes will plummet right down to the next one because nobody's interested in it here. They want it here or they want it here, but not in between. And so a lot of times that's why we will see just a steady marching of candles that will move from one to another, or a big candle or something like that. So understanding this whole idea of volume profiling gives you a great idea of where are we going to go. And you have to look at it, again, on multiple time frames. But again, for me, volume profiling is target based, not necessarily entry based, because what happened here? Choppity chop, 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 chop. See that? This is all chop. That's why we do not take a trade on a volume node unless you're scalping, right? All right. That winds that down there. Anybody got any questions or any thoughts or anything like that? Let's see. Signet says, what number should I set the indicator to, and what chart time frame? Signet, on this question here, are you talking about the LinReg or the volume profile?
The LinReg, but really it's always that issue. I mean, it could be MACD for all, that's always the question I hear from traders is what chart time frame and what number do I put in? You know what I mean? Like that's
sure.
It's what they always ask.
It's the one that makes the most sense to you. I know some people that use a MACD. The typical MACD is a 12, 26, 9, I think. Isn't that right? I think that's right.
Yeah.
I know other people that use the MACD on a 585 because they say it gives them a faster signal. But the problem is, on 585 also gives a lot of false signals. So whether you use a MACD, whether you use a TTM squeeze, an RSI, a linear regression, you use the one that makes the most sense to you. If you set it on a fast setting and you keep getting a lot of false signals, and it says go long, I'm going long, and you get stopped out, it says go short, and you get stopped out, then you've got it set too tight. As far as the 1 minute, 5 minute, 10 minute, we've got some moderators that can trade on a 5-second chart. I do not trade. I've tried it. I can do it a little bit, but to be honest, I can't hold the attention span. I just cannot hold the attention span to look at a 5-second chart and stare at it and try to make such fast, quick decisions. I just can't do it. I'm ADD. I don't have that kind of long attention span like some people do. And that's fine. You just have to know that and you adjust for it. So maybe the 1 minute chart's where you are. Other people like the 5-minute chart. Understand that the higher in time frame you go on a chart, the wider your stops get, right? Because you should base your stops on the chart, not a fixed number. You should base your stop. Let me explain that. Let's go into this right here. You know what? I could have just zoomed in on this, but at any rate. All right, here. Let's say that you were long here. Where's your stop go? If you had a fixed number of 2 ticks, and let's say you went long here at 72, then right here at 70. Is there any logical reason why that should be a stop? No. There's no reason there other than you said, well, that's the most I'm willing to risk. Well, then you got a bad entry. Your stop is here. That's where your stop is. I'm going to zoom in on that. Your stop is this red candle right here, or this one, depending on your risk and everything. That right there is your stop. Not up here because you said, well, I'm only willing to risk 2 ticks. Well, then if you'd have gotten in down here, then you'd be within 2 ticks. Does that make sense? That's why learning the entry is more crucial than learning the exit, because everybody calls out exit points. We all call out exit points all day long, but nobody can call out your entry because you're the only one that has your trading strategy. Right? Now, it's not to say that you can't learn somebody else's trading strategy and copy it. And that's fine if that's what you want to do. The answer is form fit. That's not going to turn you wrong. Okay. If the swings are going to take too much time, the price goes way outside the indicator or completely obtained, then you know the numbers, time frame. So one of the things to understand about stuff like, I mentioned this briefly, but let me touch that again. This standard deviation stuff, when you have an outsized move, look right here. We broke the second deviation band and we're outside of it, outside of it, outside of it, outside of it. Now, what that's telling you is a fast move happened and the deviation band lines have not caught up to it yet. It's moving faster than the deviation lines are. That happens. Like, for example, if you listen to Signet's morning report, and he'll talk about the 10-period moving average, and he'll say, well, if we just stay here, the 10 will come to us. Well, these kind of indicators are the same way. They take time to catch up. And since I'm on a 60 period, it takes time to catch up. So when you start seeing moves like this way outside of the bands, you got a couple choices. A, you can wait till things settle down. Or B, you can go to a smaller time frame. So if I don't like the 60 here, 60, it doesn't work. Fine, let's go to maybe a 30. And let's let's close this back out. And let's move this over because we're doing an illustration. And now you can see we're inside the gray bands because I went to a shorter sampling period. And because I went to a shorter sampling period, it gave me a more up to the moment, number. All right. But you could say, go long, we hit this red band here, go long. Well, maybe. But again, we know that we're bullish. We hit a trend line. That's actually not a bad place to go long there. Maybe the 30 works better. But when you've got, remember, today's a grinding day, or was. We've stalled now, but it was this morning a grinding day. So we were outside of the band. So you say, okay, move to a shorter time period. But if you're in a choppy day, you might want to go to a longer time period. You can adjust it, or you can just simply say, I'll wait. I'll keep my 60 or whatever time period you keep on there, and I'll wait and go look for, until it settles down, or go look at another ticker like gold or the Russell or something else, right? You have choices and options. What are we seeing here, by the way? I'm on this 30-minute here. We're starting to see a rollover, right? Look at that, rollover. And if we open this up a little bit, if I think we're going bearish now, where am I going to go? Am I going to get in here? No, I'm on the wrong side of the linear regression. I'm going to wait till I get back up here somewhere at least. We were hitting red and green lines, which is also the colors of the candles. Maybe I should change them to blacks and whites. I don't know. But if we are rolling over, ideally I'd like to see us come back up here to go short. Might not get it. We'll see. Thoughts, questions, comments? Is that indicator on TradingView or personal? Austin, this particular one is personal, but I'm more than happy to share it to you. Let me just show you very quickly how to load an indicator. I can send you the code, and then what you would do is you would come down here to Pine Editor. Then you would go to, where is it? Make a copy. Where's new? Dadgummit. Or is it over here? It's over here, somewhere in here. Save, make a copy, rename, create new. So I'd click here, I'd go to create new, highlight all of this and delete it, and then paste in the code that I send you. Then give it a name, and after it compiles and everything like that, you add it to the charts, stuff like that. That make sense? You good with that, Austin? Can you repeat those steps? Cool. All right. So I will, I'll just go ahead and give it to you guys. I'll post it as a text document or whatever. What am I trying to do? I'm trying to go to here. No, I'm not. Pine Editor. Open. Linear regression. Yep, there it is. Would you like to save them? No. Copy. Notepad. Save it there. Save as. Just stick that into downloads. And reg. Replace. Yes. Close. And no, actually it's Discord. I got to come over here and do it. clicky the button, clicky the label thingy, clicky, clicky, clicky. Linear regression with standard deviation channels for trading view. Just copy that context into the procedure that I showed you. You can change the name or whatever you want to. Okay. All right, any other questions here? That's my half of the day. Signet's up now. Any final questions here before I hand everything off to Sig? 3, 2, 1. Signet's all yours. Thank you, gentlemen, ladies and gentlemen. Y'all have a good afternoon. Bye. And dropping. Stop at the swing. Oh, I see Renata's typing in. Signet, you ready?
I am. What's going on, everybody? Let me just
I gotta
set
pull my
things
britches
back.
up, tighten my belt, slide my shirt around a little bit there, and
Yep, put your big boy britches on. The in the streaming replays, we did a couple of sessions on volume profile, floor pivots, and unfortunately, a lot of those videos they just don't have a description. They just say, stream replay. So I've got someone in the works that I'm looking to hire to go back and watch those videos and get some broad outlines on what was covered on those days so that we'll be able to add those descriptions and you'll be able to run a search in the Discord for keywords that should take you to those videos because they were really great introductory videos on volume profiles and floor pivots. And I mean, we cover these same topics, about every 4 to 6 months. We get another wave of clients in that are new. And of course, they don't know that we already did those things and they're not labeled. So, how would they find them? You know, so it's in the works. I'm hoping to have something I don't want to put a date on it because it's going to take somebody time to sit there and listen. I was really hoping to feed it into AI, but since I don't have transcripts of the videos, most of the AI services that I found said we won't do a 2 hour video without transcripts unless you want to pay X amount of money. And even then, I wasn't sure that the applications that I found would do it because they were like, maybe we will, maybe we won't. Pay us for a month of service and try it and find out. Like, nah, I don't think so. So I'm gonna have to get someone to manually do it. Not now.
get you an out of work medical transcript person.
I can't go back in the past and turn them on because they already went by, right? And to do it from like here going forward would be something completely different. I'd have to figure out how to get the OBS to start doing it. Yeah, I'm interested in doing that because it would certainly save us some problems going forward. But when I use Zoom personally a lot, and Zoom has a built-in AI system now, so that as I run my Zoom stream, it's taking notes and it will by default give a summary of the topics covered, and it includes action items and a nice little like table of contents of things that were discussed. I really like it. And I don't even have to do anything, right? All I got to do is stream. It just does the rest without
Got
me
an
even
idea for you.
asking.
Got an
Yeah.
idea then? Well, just set your Zoom up, play your video in the screen, go to bed, come back in the morning, Zoom's transcribed your video.
Yeah.
Does that make
It's
sense?
not a bad idea, right? Because I could do like one a night
Yeah.
And I only stream twice a week, so in 1 week, in theory, I could get 3 months of streams done. In theory. So
See,
I just
the
scrolled
problem
back.
is
I
there's.
know
Sorry, go ahead.
I did post some videos last year with descriptions around the topics that we're talking about. So if you did go into the stream replays and you scrolled up into 2024, start in January of 2024 and start scrolling towards the future, because I just went from now till like November of last year and I didn't see it. So I'd say go back farther than November of last year. I'm pretty sure I wrote in the title or in the headline something about that, but I was just quickly scrolling back while the stream was on and I didn't see it. It's all good.
Well, you have multiple computers, so you could put a Zoom
I
call
do.
on each one of them. Go to bed at night.
Yeah, that's
Years
true.
ago, years ago, I had a macro for a game I was playing called Ultima Online, and it would. I was a tailor in the game, and throughout the night, the macro would make shirts. And my wife says, "I am so tired of going to bed, and all I hear is snip, 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 snip," because you could hear it all.
We saw a retail push today in Costco, Dollar Tree, Dick's Sporting Goods, Walmart, really big. There was just a really big push in retail today, and I was thinking, maybe it was a broader market push, but it doesn't seem to really have spread out into everything else. So, it just caught my eye and it's I'm a little curious if it's going to stick around. But when I went into this scanner, which is like my little default intraday scanner, I tend to take a look at who's dominant, bulls or bears, and then what areas are dominant if we're mostly bullish or mostly bearish. And Walmart was just getting things done today. There wasn't really any news on retail that I could see, but I mean, look at that drive in Walmart,
Good
you
googly
know,
moogly. That's 5% in one day, 4 or 5% in one day.
is really
Wow,
amazing. And
nice.
it's not alone, right? If you look at Kroger, Costco, it
See,
even the others, smaller ones like TJ Maxx, eBay, Baba, we're looking at 3.5, 4% moves across the board on these guys. And it was like, what the heck? Even TJ Maxx, which is, like a turd in the punch bowl, was
what
getting some kind of push.
what about XLP as a whole? Yeah, there
It
it
looks
is.
like Walmart, as it should, right? Because Walmart is pretty big. So
Okay,
yeah, I
okay.
just that got my attention. And on a day-to-day basis, whether you're day trading, swing trading, this is something that I tend to do every day is just looking at what is the basket of stocks that are moving. And these scanners, I've gone over these in videos before. It is something that I stumbled on with Thinkorswim a long time ago, and it just kind of stuck with me. So if you open up Thinkorswim's indicator list for watch list columns, and really the indicator list too. But I went through every name in the list, every indicator that was on there. Of
Oh,
course, I've added my own over the years.
God, I've done that too. Oh my gosh.
I went to Google, I researched every one of them, I added it to the chart, and I just wanted to know, hey, what do you do? How do you use it? What were you made for? And sure, it took time, right? But I wanted to be a well-rounded trader and have a good idea of the tools that are available to me. And how do we know what we want to use until we even know what the heck is even out there? So I just started at the top of the line and began working my way down the list. And at some point, I came across an indicator called the high-low graph. When you apply the high-low graph to the watch list column, it's not impressive in any way. I'm going to add it now so you guys can see it. It's this bright green bar here. And of course, I'm adding it to something that's already filtered for the high numbers, right? This is only going to show me 90 and above. So let's apply it to something like robotics. So I'll come in here and put in the high low. I've never had to adjust the settings. I just use it on its default state, which is daily. And we can see it's got the number here. A lot of times it'll have like these histogram bars of red and green, but it doesn't really excite, right? You look at that, like, so whatever, right? Not
Yeah,
really
that is
interested.
how come it is not the histogram? Was that a setting?
It might be a an adjustment, but it shouldn't be, right? Mine should be set to its basic default setting. Yeah, daily. Oh, it says daily high, daily low. No, it's supposed to just be one or the other.
That's odd. Okay. Anyway,
They fixed it. Oh, you know what? I added the wrong one. That was the day's high and the day low,
okay.
not the high low graph.
Yeah, there we go.
Now this one will work. So it's supposed to be these pretty little histogram bars. And of course, when I first saw that, I thought, well, that's what am I going to do with that? I was not interested at all. But this thing is a really great way of finding things that are getting attention right now. So I'm going to remove my robotics list and we're going to just put in, say, weekly options. And that way, it's anything that has weekly options is going to show up in the list. And there's what, 600 and something things that have weekly options. And if we sort it from its high to the low, LQD is high on the list today.
What?
And of course, it's getting a push, right?
Hmm, yes. Yeah.
That's what it's going to find is things that are getting a push right now. If you go to the extremes, 90 and above or negative 90 and lower. So it goes from 1 to 0 to -1. So it uses decimals, 0 0.5, 0 0.4, but it also goes negative. So negative 0.4. And I took all that, kind of thought about it for a while, and I made an indicator. Well, I made a scanner that focused on just 0.9 all the way up to 0.99. And that was my bullish scanner. Then I took it and rewrote it for minus 0.9 all the way to 0. Minus 0.99. So the extremes of each side. And I got rid of this because this little histogram thing is just silly. So got rid of it and used my scanner to find stocks that are hitting at 90 and above or minus 90 and below. And when I stack those things side by side, it shows me who's getting attention on the day. Are the bulls getting attention or are the bears getting attention? And if it changes, I see it. We get these waves of trading activity through the day where there'll be a lot of activity and a lot of names start showing up. And then it gets slow and then it just dries up and there's no trading activity.
Well, now,
Or one side will be heavy and one side will be light.
do you trade it by shares or do you do a credit spread against the open?
Most of the time, I trade this stuff with stock
Okay.
since the things that it shows are not really good liquid option stuff.
Well, I know
And
when you put it on the weeklies, but yeah.
I'm just too picky. If I only focus on things that have liquid options, I won't get a trade a lot of times.
Yeah.
And
I
I'm
understand
okay
that.
with that. I'm okay with no trade. But at some point, it's like for the last 3 months, everything has been so concentrated into like the Mag 7 group or the hyperscalers and the AI. They're like, if you're not getting into this little niche area, you can't find liquidity. Anybody have a idea on how to help Mr. Crowley? He's in the support channel with sound issues
I'll take a
and
I'll take a look.
probably needs a little guidance. So we can see right now that my bear scanner is way more heavily filled than the bull scanner. And it's not just how many names are in there, which I like that. We call that breadth in the trading world, right? What's the breadth? How many names do we have? But then there's the other side of that, which is, well, what kind of names do we have? What sector do they belong to? And what industry are they in? To me, those are really important questions, because if we're going to rally on the day, if we're going to have like the S&P and the NASDAQ pushing, then I need a particular sector or industry, or I won't run it. I won't believe it. I won't trust it. I won't trade it. I don't mind just sitting out and not participating if I don't think we're going to get it. It goes hand in hand with, like buying out of the money options, or your 0 day lotto plays where you want to sell on the edges, because it depends on what's pushing and whether or not that push is going to continue. I really don't turn this thing on first thing in the morning, because at 9:30 we got everything pushing, and that just confuses it. So I like it later, when it gets slow, like around lunch and beyond, into say 3 o'clock. I monitor these through the day to kind of keep my finger on the pulse of what's happening out there in the market. So it's a little bit of an indicator, a little bit of a trading opportunity, and it's just a nice way to keep track of what's happening out there. It's easy to get sucked into Apple, Amazon, Google, Microsoft, and then just not look at anything else, right? Or to fall into our thematics where we're looking at drones and robotics and AI and UFOs, and we're missing things like Costco and Dollar General, So this helps bring stocks to my attention that honestly I probably wouldn't look at if they didn't show up on this list. I'm just too picky. I don't care, you know, and I'll go without. So I have done videos on this. If you guys want to know, what I've done before, I think you could even search in the chat, because I have broken that code down and posted it into Thinkorswim. But I also wanted to point out um, Discord itself. I have made bold statements in the past that Discord can improve you as a trader 100% better than where you are today. Now, obviously, if you've been trading for 10 years, that very likely isn't going to be true for you. But if you've been trading for 6 months, a year, and you want to get better, one, learn how to use Discord. And then two, make your own Discord server. It is an excellent journal. It is a great place for you to develop your playbook, your trade book, and keep track of your trades. This is the Thinkorswim workbook. I clean out my Thinkorswim about every 3 months or so, because I just like collect indicators and I make my own indicators, and it just gets bogged down after a while. And I didn't want to delete them. I'm like, well, where am I going to put all this stuff? So I made a Discord and I started to throw it in there. And now, a couple of years later, I've got a Discord with just all kinds of indicators and watch lists, watch list columns, share charts, and even indicator background and trade ideas, right? Anything that I found when I was out searching for something that I thought relevant, I would grab it and throw it in there. This is a free place. It doesn't have a chat room. You can't go in there, and talk to other people and get feedback and questions. I didn't make it that way. It's just a locked down library where you can go in and you can get anything that you see in there, you can have it. The idea being that I'm not out to make money off of you, right? I don't want to sell you anything. I don't want to be responsible for advertising and promoting and solving your tech issues. If you want it, there it is, and have fun with it. So the other day I was posting about the weighted AD. And the weighted AD is from Peter Resnicek. He had his guys code this indicator up, and they sell it to people for a pretty sum of money. Now, I happen to have gotten my hands on it. I don't buy indicators, but they tend to find me. So I have a version of it, but I don't want to get in trouble for giving it away. I don't want sued. So I can't give it to you. But because I've spent a lot of time hunting for things, I went looking around on the internet and I found an indicator that is exactly like this indicator, except that the numbers on the side are different. That's it. It functions the same. And after I played with it a little bit, it even looks the same. So this one, which is called not the weighted AD, is exactly like mine, which is the AD, but it's not, right? And now he can't get mad at me for giving away his indicator because, well, it's not his indicator. And I made a video and showed where I got it off of the internet just to, cover my butt and say, nope, I didn't get it from you. I didn't take yours and recode it. I got it from this guy on the internet. So the reason I bring that up is it is a nice, handy tool to have around. But like all tools, it has limitations. And when I started using it, I didn't know what levels were important or even if there was going to be any important levels. But after a while of just using it, every day, every day, every day, looking at it for months on end, you kind of get to the point where you notice some particular behavior that becomes relevant. This thing stalls out a lot of times under the 250 line or at the 250, and it just can't seem to get any further. Like on this day, we stalled out at around 100 and we just couldn't get past there. Or this day, the day before, we were at like minus 175, 200. We just couldn't get through there. So I don't know what your weighted AD is going to be because I don't remember how far off the numbers were, but it will be relevant. What I wanted to do is show if we do get wild and crazy and we get one of those wow days, this thing really expands. So will yours. It won't matter what the numbers are. How wild is that thing? Is it, pushing 300, 400, 500, 600? Then you got a strong push in the market. Go ahead and run with it. But if you're looking at it and it's choppy, violent, holding around the zero line, keeps crossing back and forth above and below zero, and it just won't go anywhere, that's probably what the market's going to do, is that same sort of behavior. So what you should do is put the indicator on, look back in the past, and kind of get a feel for what it looks like. And another thing that I like to do with these, but really with any indicator, MACD, RSI, stochastics, tick charts, doesn't matter what it is I want to find the kind of trading day that I'm interested in and then apply that indicator to it and see what it looked like. I also want to find trades that I do not want to play, right? Those kind of days where you're just like, oh, I wish I'd have known it was going to be a day like this. I'd have never have traded it. Got to figure out what we called this thing. Why? There it is. Weighted AD. So if I put this thing on my chart, I can go back and find those days that I would really like to trade or days that I would really not want to trade and look at what the indicator was doing that day. So on this one, it was one of those days where we were falling and it looked like we were going to make it back. And yet we hit back inside of that open range, that 1 hour open range. We got back inside it, but this barely got back above zero again. It just was not interested in that drive. And it immediately rolled back over. So you can find as many examples as you can find and just store them up, collect them. Where do you put all of that information? Put it in your Discord. So this is one Thinkorswim Discord that I share publicly. All of these are Thinkorswim Discords that I've made over the years. They each have their own purpose. I've taken books and ripped them apart into little pieces and then rebuilt them inside of a Discord just to learn some particular thing that the book was giving me. you can really use Discord to help you improve as a trader. I'm looking for I've got a public playbook that I have shown before. But since it's not my real playbook, I have to hunt that thing down. Here it is.
Was that Wendy on your icons there?
The Big Short. It is. They took Wendy's icon and they used it for their Discord, but it's the Big Short. It's a
Okay.
it's a indicator. It's an options company.
Okay.
So this is my playbook that I've used for examples, and I've got real trades in here that I took just to throw them in there as a trade journal example. So the idea would be, say you start a Discord and you decide, I want to learn about, oh, I don't know, initial balance. So you make a channel called Initial Balance Research, and then you jump online and you grab every video that you can find from reputable places like IBKR, Schwab, not Jimmy and his mommy's basement making videos, but you know, good content stuff. You grab all that and you stick it in a channel, just a bunch of videos, books, PDFs, webinars, anything you can get your hands on that topic. Then, because you can watch videos from Discord, you pop up a video, you start watching it, and you're taking notes underneath that video. You can pause it, do a screen capture, post those somewhere, and now underneath that video is all of the notes from that video. Because I don't know about you guys, but what I found that I was doing when I was new is I would try to multitask. Notice the keyword there, try. I would put on a video with good intentions. Oh, I'm going to watch this video and learn about whatever topic. And then I would turn on my Thinkorswim or my Trading View, and I'd get to fiddling with the charts while I'm kind of listening and paying attention to the video, but, kind of not really. And then at the end of it, I'm like, oh yeah, I got it all figured out, baby, because that was really good stuff. Of course, there's gaps missing because I wasn't listening, I wasn't paying attention. I don't remember it all because I didn't take any notes. So by doing it in the Discord and not paying attention to charts and indicators and chat and phones and everything else, I got my notes and they are right underneath the video that they belong to, so I can just turn the video back on if I need to and go back and watch those again. Plus, the screenshots really help. And that's how I've taken a deep dive into a lot of different topics. That, and then I do learning modules. It's really the name that I've come up with. It's just these segments of time, 30 minutes, 45 minutes, depending on how complex the topic is, to where, you turn on the 30-minute alarm and you go to work, and when it goes off 30 minutes later, you're done and you go do something else for a while. Maybe swap topics or, take a break. So then I can do 4 or 5 modules a day, spending, hour and a half, 2 hours on moving averages each day, or maybe 3 days a week. Profiles, hour and a half a day, 3 days a week. And it starts to add up. I've studied moving averages for months and months and months. And I've said that, and I've had some smart mouth people say, "What? Are you broken? Why did it take you so long to learn moving averages? I read one book, watched a video for 30 minutes, I figured out moving averages." Yeah? Are you a profitable trader? Crickets. Probably want to spend some more time on moving averages. That's just one example, right? Any of these topics, all of these topics. I can learn moving averages in 10 minutes like anybody else. I'm not broken in the head. But there are a lot of different moving averages. And there's a lot of different types of moving averages. And then those moving averages get used in a lot of different indicators, like a MACD. So I took the time, months of time, to learn about something as simple as an indicator, like a moving average. so that I know how to apply it on multiple time frames. I can use it, in so many ways. And I can honestly say I still don't know everything there is to know about moving averages, right? And that's just one topic, but you would think after that many months that I would know it all. I still don't know it all.
Well, let me throw in also, a lot of people have to realize that much of trading is psychology. It's psychological. There's a lot of movements in trading that make no sense whatsoever. For example, head and shoulders. There's no particular, there's a psychological reason that head and shoulders work. That's all. Psychological reason. People see it, they expect this to happen, that's why it happens, if it, or whatever. So when you study an indicator like moving averages, and people say they're amazing, or that trend line. I talked about that trend line earlier, and how you can see the time and sales light up like a Christmas tree when it hits a trend line and all that kind of stuff. Again, it's all psychological. People expect something to happen. So when the 50 crosses the 200 and everybody says, oh, the death cross, oh my gosh, we're going, or the golden cross and all that, it's because people expect it to happen. And it happens just as much as it does on the 1 minute chart as the 1 day chart. So, yeah, there's always stuff to learn about it. It's not just the technicals, it's the why and what's going on behind it and what are people thinking when they make the trade.
I'll give you guys a little bit of hope though, because I've had people say, well, what should I do first? Do what excites you first. You know, we are all creatures of habit, and none of us like being told what to do. Gravitate towards the type of material that has your attention and excites you as a person, because anything you learn about trading will help you be a better trader. Anything. Is there some things that are more important? In my opinion, yes, but that really doesn't matter. If you want to learn candles later and indicators first, do that. If you want to do it the other way around, do that. Anything that you learn will make you better. So it doesn't really matter at the end of the day. Will you, progress faster than others? Sorry to say, there are some slow people, right? And it doesn't make them bad people. They are slow.
I'm
They
slow.
are going to take time.
I'm
I'm
slow.
slow. Obviously, I took months at moving averages.
It took me 2+ years to become a halfway competent trader because I got off on the wrong foot in the very beginning. I got
So
in
you
when, yeah,
can't set yourself up to somebody else's standards, right? Set your own standards and just try to be a better person today than you were yesterday. And that's not easy to do sometimes, but you know, progress at your pace and don't give up, because the only ones I've ever seen fail at trading are the ones that gave up. Everybody else, if they keep trying, they find their niche, whatever that happens to be. It is overwhelming sometimes. I have a client who is just having a hard time, and he said, I just want to turn on Netflix and ignore all of you for the rest of the week.
mm-hmm,
I said, well, you should probably do that. Your body's telling you you've had enough, and
mm-hmm.
trying to struggle through it, you're just going to hurt yourself even more, and you're going to feel like this next week. So call timeout, back away. Believe it or not, you'll come back sharper and better than when you left anyways.
And it's a valid point because if you dread doing something, you will not try to do your best. Not trying to be
Yeah.
critical to anybody or anything like that, but we just don't do our best when we feel like we're forced into it. And we definitely aren't going to learn anything, unless we really get burned or something. Then we get angry and we start looking for somebody to blame and everything else. Um, blah, 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 blah. Whatever. You're 100% right there. I've done it. Me personally, I go through phases where I get overwhelmed with maybe something in life or something like that. And when that happens, I know I'm not trading this day. I'm not trading this day or maybe even this week. There have been times when I've dropped out for an entire week because I've just been overloaded and I can't think clearly and I make stupid decisions. And I know that about myself, so I walk away. But I had to lose my ass a couple times until I figured it out.
I had somebody ask me the other day, how do you do this just day in and day out, day in and I'm with what I just read in the chat. I love this stuff and it doesn't feel like a job. And that is the key to how I keep coming back and doing it every day, every day. I still get my butt handed to me sometimes and it doesn't feel good to get kicked in the face, but at the end of the day, I just really love this stuff. I just set my chart to something because I wanted to talk about this real quick, and then we're going to jump through some tools and see what the market's doing. But I loaded just a bunch of random indicators. I don't even know what half this stuff is. I just started clicking buttons to use this as an example of what I never want my charts to look like. Right? There's way too much information on here. Now, funny enough, I said I was clicking a bunch of stuff and I wasn't looking, but all of these are in my favorite list, which means I've used them enough that I clicked favorite so that I could find it again easily. You probably have never seen me post a picture with any of these on it, but it doesn't mean that I don't use them. I use indicators like everybody else. I use them to evaluate the market, to get a read on things, and then I turn them off again. I don't use them to get in the trade or to get out of the trade or to decide if I should stay in or if I should get out. I just measure stuff with them, like using a tape measure on a board to figure out where I want to cut it. Right? The tape measure doesn't tell me to cut it. It just says this is how much you've measured right there. So these indicators, when I do apply them, I like to apply things one at a time, maybe two, like one on top, one on the bottom. And if I need four bottom indicators, then I'll load another chart and I'll put one bottom indicator there. And if I need another one, I'll load another chart and I'll put another one on there. If I need to compare multiple lower indicators, then sure, I'll turn on multiples just so that I can compare them against each other. But I don't want a chart that looks like this, with 21 different indicators on it, just stacked on top of each other, showing all of this information all at once. To me, I want to put the pieces of the puzzle together, one piece at a time, asking key questions, like what's the momentum? What number do I actually have? Is it increasing? Is it decreasing? What do we have a trend? How long has the trend been going on? And what are the pullbacks looking like? Just question that I can answer one at a time without getting overwhelmed with all of that stuff on the chart. Which is why a lot of times when you guys see me share a picture, it has a drawing on it, maybe a VWAP or a moving average, but really that's about it. Because it'll just detract from what I'm trying to say if there's a bunch of stuff all over there and it's like a shiny object. Everybody gravitates to, oh, another indicator. Yeah, but, and then we have all these caveats of how you can and can't use it or should or shouldn't use it and when it's useful and when it's not and just bah. So if you want to use indicators, really try to hone in on some basic questions that I've asked over the years, like who made it? When was it made? I found those to be really important questions because if it was an indicator that's really modern, a lot of times they'll have a modern time frame to it. If it's a really old indicator like an RSI, a MACD, those have been around forever, then they'll have a lot of educational material. There'll be books and webinars, and they've been studied by researchers. So you can go to the college and you can look up books on RSI, MACD, because they've done extensive research on those old indicators. So I know what to look for. If it's a new indicator, I rarely go to the college. If it's an old indicator, I go hit the college and see what background they have on it. Has it been, used by hedge funds and high frequency traders? And who made it is another big one because a lot of times you can go to Google and you'll find that those creators have their own website where they've had to go back and kind of give explanations for the things that they said in their book, or they've had to readjust their words that they've used, like Gerald Appel with the MACD. He is so mad about how people use his MACD, but there's nothing he can do about it, right? He made it, gave it to the world, and they're just like, yeah, no, we don't like how you use it. We're going to use it our way. I mean,
Well,
it seems silly for him to get mad, but he's like, I didn't make it for you to do that. So what? That's what they're doing.
You remember the B4 indicator came out about 6 months
Yeah.
ago, and everybody thought
Uh
this
huh.
is the coolest thing. Nobody understood how it worked. Nobody understood a thing. There was no documentation about how did this thing work. And we all looked at it and we studied it and cross-eyed and everything like that. I finally got rid of it. But some people really swore by it. Said this is the greatest thing since sliced bread. I'm like, well, okay, but I still like to know how and why it works. But
That's
anyway.
with me and the voodoo lines. I just won't use them because you can't recreate it. You have to go to them and they give you the code that has the new lines. Like, how did you get those lines? Well, we don't want to talk about it. Well, then I don't want to use it. It's really as simple as that. On the screen right now, we're looking at the Mag 7 as a collection of stocks, right? It's Apple plus Microsoft plus Google plus Amazon. 3 years ago, basically, this was the only way you could see them collectively in the pre-market. Once we were in the RTH, you could use the NY Fang, which is just NY Fang. And that's great. It's fine as long as it's during regular trading hours. But in the pre-market, you're left just kind of in the lurch. This thing don't work. So we made this homemade ETF or this little homemade indicator of the Mag 7, and that's what we used for years. Now there's a really nice ETF called MAGS, MAGS, and that works just as good. So if you're on Robinhood or Webull and you can't use the multiple symbol uh, tickers like we're doing here with Apple plus Microsoft plus Nvidia, if you're on a broker that don't do that, just use MAGS. And MAGS is a really great indicator of what's going on in the broader market because the Mag 7 is the market right now. They are 40% of all of the market and they are 30% of all of the earnings for the market. Those are big numbers. 40% is in the top 10. That's bigger than the dot-com bubble, right? Which was at like 27%. So these guys, if they start giving up the ghost and indicate weakness, then you should expect weakness in the broader market. And when I bring this thing up and I look at it, we're still sitting at highs, right? We're poking through into new highs. And we can come over here and look at this one. This one's actually just at highs, but I've got weights in it, so it's a little modified. I trust mags more than that homemade ETF that we have. This is showing new highs, right? Breakouts from the previous high. And if this is still pointing to the upside and it's still bullish, then big money is still flowing into the market, and we do not want to short this market. Nothing wrong with lottos. If you want to grab some way out of the money put for 2 pennies, heck yeah, go for it. Why not? Because the worst that happens, you're going to lose 2 pennies. You know what I mean? That's $2. You can't get coffee at McDonald's for $2. Go for it. But I'm not going to go get all bared up and try to short this market because, well, the Mag 7 is breaking new highs. At some point in trading, you have to learn about ratio charts. Ratio charts are a game changer when it comes to analyzing the market. And it could be any market. Let's say you want to trade the ES futures. I mean, why not, right? Or maybe you want to trade SPY. You should totally look at the QQQ, right? I'm sure you've all heard that. If you're looking at the Qs, look at SPY. If you're looking at SPY, look at the Qs. Well, how about put them together? SPY, QQQ. Now you've got an indicator. So learning how ratios work can be useful for all sorts of things. If you want to trade McDonald's or Starbucks, it really doesn't matter what it is that you want to trade. What if you just want to compare what you want to trade, like Apple, against the broader market, like SPY? Is Apple outperforming SPY? Is it outperforming the broader market, or is the broader market outperforming Apple? We can do that by using a ratio. So understanding how ratio charts work really help you on the analysis side of things. And I bring that up because a lot of the charts that we're going to look at today are ratio charts. It's just the way that they work. And I'm going to have to speed this up because at 4, I've got to go. I can run over for like 3 minutes, but after that, I have to turn into a pumpkin. This is IWF IWD, which is growth versus value. Now, there's a lot of growth ETFs out there that you can use and a lot of value ETFs that you can use. I had somebody tell me about this one who's a macro analyst, and they use the IWF IWD. But when I asked them about it, because this is Russell's, by the way, this is a small cap, and they were saying this is a really great ratio for keeping track of the Mag 7 and the broader market. And I said, well, how do you figure that? It's the Russell, right? Like that logic don't work. And yet it does. They showed me multiple examples of how this was the turning point for the broader market going down over and over and over again. So I can't argue with their logic. And I have the same issue with this indicator. That green line that I monitor all the time in the CTIX, it is the front line of defense for me to call reversals on the day. That green line's the Russell. Don't ask me why that works, but it works. That's just the way it is, right? So I can't argue against it. It is what it is. So IWF, IWD is a really good signal on big tech, Mag 7, and market reversals. I know that it's not time to short this market because we're still pointed to the upside, making new highs and new lows, and we're still going. Now, sure, we had a little bit of a pause back here where we topped and pulled back, but then we just ran right up, broke through it, and we kept on going. And until this gets back below that 2.22, I'm not looking for shorts in the broader market. And even if we do, those will be short-term shorts unless we start to establish a pattern. Maybe a wedge, a head and shoulders, something other than just, it broke that purple line to the downside. So no short. There are some shenanigans going on. See the MACD, excuse me, the stochastics down here. It's pointed to the downside. So, there is a discrepancy. We got new highs here, and yet I'm under the 80 line and pointed to the downside. I've even got lower highs and lower lows getting established here. So I've got divergence. But man, I've had divergence since all the way back here, since we broke that white line, which is the year-to-date anchored VWAP. We got above that, and we've just run while this has been telling me, be careful, watch out. Well, thanks, but, if it ain't broke, don't short it, and it ain't broke. Now I have this one. This is my own personal one because they told me about this and I adopted it. I love it. It's great, but it's still just Mag 7 stuff. We're all looking at Apple and Google. You don't need to remind me to look at Amazon every day. I look at it every day. I need something that's going to look at the broader market, the things that I don't remember to look at every day, like Home Depot or Hog, right? Harley Davidson. So I went looking around and I found the S&P's growth versus value ETFs. And I built a ratio that does the same thing, but this one looks at the broader market and it's not so magnetized on just the Mag 7. And it's been topped out since early June. And we've been making lower highs and lower lows, and we broke trend, and it's still above the anchored VWAP, but it's weak, it's laggy, and sure, recently we got a new high. Great, it's still broke. This thing, it was in a full downtrend. 2 lower highs, 2 lower lows, and it was just getting it done. So we turned around. Right now, this is indecision. We don't know what's going to happen next. In the broader market, we are losing it a little bit at a time. It's starting to slip, but I would not look for a short, not yet. So just from those two charts, right? Well, those three really, because this is two different ones. These three charts are telling us do not short the broader market. Just don't do it. You can do it with lottos, but don't size up because you're just going to get run over. This ratio is really complex. It is using currencies from various nations and their bonds and their treasuries. So the why doesn't really matter, right? Other than how do I build it? And it's US 30 minus JP30. So if we go in here and look, I'll just copy this, and then you guys can put that right into your chat or right into your search box. And that way you know that it gets put in exactly the way you need it. And I've got it on 2 time frames. For the one over here on the right, I'm just going to hide these 2 lines for a moment. So as you can see, I've got the daily twice, and then I've got this intraday. On the intraday, you could do a 1 hour, 4 hour daily, or like a 30-minute, 1 hour daily. I've got a 1 hour and a daily, and then this other daily, the one that I turned things off, it was actually showing us the NASDAQ and the S&P. So those are the things that I turned off, and it's going to turn them back on now here in a moment. A little laggy. Come on, wakey, wakey. There it goes. So the S&P is orange. We can see the orange writing next to the S&P up here. And the NASDAQ is this sort of a cyan color, and because that's the color next to the NASDAQ. When this ratio moves, it should move in line with the other markets. But there's times where one will get ahead. The NASDAQ will outrun everybody like it did back here. It just broke out much farther than the blue line and the S&P. It just really ran, which means when we do fall, it has farther to fall too. But that's a separate issue. But you can see, like right now, the blue line is closer to this lower pivot, and the S&P is next closest to the lowest pivot. The NASDAQ is farthest away from this lower pivot. If things start to get nasty, this blue line is going to break that level before those other 2 will. It'll be a heads up, right? We'll get that short before these 2, very likely. And that'll be a tell. It'll be something that I've been watching for. If we break down here, and then maybe like the same day or very likely the next day, the S&P will do it, and then finally the NASDAQ will do it. So it can be a leading indicator on broader market outlook. And this ratio works in the pre-market, which I'm really grateful for. Not all of our tools work in the pre-market. So that's one that I like to keep on the radar. You will see this ratio again because I've got an intraday chart that I use it on a 5-minute or a 15-minute. So we'll be getting there. This is just your basic 10-2 spread. Banks like it cheap and steep. That's what we've got. But we've been stalled out here around that 0.6%. We are above 0, and we're just holding the line. Thank you, sir. And if you look at it on the weekly, the daily looks a little rough. But man, look at it on the weekly. When I zoom out just a little bit, that's a really tight range in the 10-2 spread. And I'm telling you guys, when that thing breaks, we're going to feel it. I'm not saying get ready, we're going to get bearish, right? I really don't think it's going to be bearish yet. I don't think we're going to be bearish until September. No, excuse me, November. I think we'll make it right through Halloween by like on ice skates, and then it's just going to get really ugly after that. That's my default position right now. But if this breaks early, it's game on. It can be, long, short, I don't know. But I think we'll be done with the where do you think the market's going when this leaves? Because I think we're all going to know. It just needs to leave, and it hasn't done that yet. OPEX is the 15th of this month. It's next week, I believe. Where you at, OPEX? Oh, shoot, I changed my screens around. So not this Friday, but next Friday. That's right, because August 1st was a Friday. So 3 Fridays is
3
OPEX.
Fridays is the 15th, which is next Friday.
Yes,
Friday was
sir.
the
And
first. Yeah.
I think we come out of this box either on OPEX or the Monday after OPEX. Right? Would be the 18th.
And you
Yes,
think
sir.
that's
It'd be
going
the
to be kind
18th.
of bullish from there until we get into
I would
fourth
like
quarter?
to think bullish. I really would, but
Well, I say
we're
that
gonna have
because
Jackson.
I have a personal interest in this because I put on a pretty good sized put.
I
uh,
think we got Powell coming. You know what I mean? And if that If that put is really cheap, heck, hang on to it, you know. But if it costs you quite a bit of money, maybe hedge it. I know your put is your hedge, but maybe you have to hedge the hedge.
Yeah, I think you got a point there.
Because man, it's like the clock is ticking, you know. And I think it's going to be OPEX or the Monday after OPEX that we're going to come out of that box. This ratio is a volatility ratio. And I can nerd out on, you know, backwardation and contango, but let's just keep it simple and say that when it comes to volatility, we have normal and then we have oh damn. And right now we're in normal. We're not in the oh damn. And as long as this is pointing up and it's above this green line, we're good. You want to buy stocks and you want to be long the market when this is going up and it's above the green line. What you don't want to try to do is when we break the red line and we're headed down, you don't want to be trying to buy stocks and, you know, get heavy in the market to the upside. So we don't have any short looking at this. This is telling us, you know, don't get heavy short. This is a monthly chart. It's one of the few that stays on a monthly for me, but I never leave the monthly with this. And it is my tech chart. I know the symbol seems weird, but it's actually the Nasdaq versus the S&P. The reason it's not like the NQ or QQQ is this is the full Nasdaq, right? Like the 3,000
Index.
names or
Yeah.
yeah, it's the big one. So I like it just the way it is. I don't ever change the timeline. And I thought we would stay bullish all the way up into the August expiry. We didn't make it there, at least not yet. But we got another week, right? We got till next Friday. And I don't think we're going to make it because these are monthly candles and we're stuck inside of last month's bar. We can't get out of it, at least not yet. And we're in this liquidity cloud, and I just don't think we're going to make it through. But we're there, man. We're at the top. All we need is a little push, and if we can get out of that, we can run straight up into that next level. But the thing is, as long as this is green, you don't want to short the broader market. And this is solid green, right? It's at the top of the box. It's not even showing a wick up there. And we've had 4 solid months of green. And sure, there was wicks on that one. You know, no wick on the top of this, no wick on the top of that. And right now, no wick on the current month. So short the broader market? Nope, not this says no. This is a ratio chart of the weighted versus the unweighted. We know that the S&P gets bullied around by the Mag 7. So the RSP is SPY without the weighting of those big bullies. We say that 10% of the stocks have 50% of the market cap. And that's an exaggeration, but not by much. This removes that weighting and just makes it fair. So that's what RSP is. And we compare RSP to SPY. When the ratio is going down, SPY is in control, which means the Mag 7 is in control. And when the ratio is going up, then the unweighted stocks are outperforming the Mag 7. We see that happen in bear markets. So 2022 bear market, the S&P and the Nasdaq fell, this indicator went up, right? It's pretty simple. Now that we're out of the bear market of 2022, the indicator has been falling, price has been rising. We're at record lows that have never been seen as far back as I can go. So that tells you that the weight of the Mag 7 is greater now than it's ever been before. But we knew that, right? That's not a surprise. We've got $4 trillion market caps on like multiple companies. This is not a surprise, but it isn't broke yet. It's still pointing straight down. And until that starts to go up, there's no short. And look, it went up here, it went up there, it went up there, it went up there. Those are just little bitty pullbacks. We need a real honest to goodness pullback upward move where, you know, we set a high and we set a higher low and then we set a higher high. We need that kind of behavior. And we don't have that yet. So can't go short with size because we don't have any short signals yet. This is the same kind of chart, only instead of using the S&P, I used the Qs. So it's the same logic. It's just the QQQ instead of the SPY. And you can see the same thing, right? That when the indicator is rising, we don't go up and or we actually go down. So if this is pointing down, you don't want to try to short this market. And that's what it's doing, is pointing down. I wanted to get through those charts today because we are all trying to figure out, hey, should we be getting bearish? I mean, you should be concerned of some bearish impulses for sure. We're all worried about how high up the market is right now, but we don't have any short signals. None. So until we do, maybe grab some lottos, right? Or just nibble around the edges on some shorts, because there are some stocks like Netflix and a few others that are giving us some short signals, but that that is individual stock picking and not the broader market in general. Once we break some of these lines, the call out will be short at will, right? Instead of fire at will, it'll be short at will. Short anything you want. We're headed to the downside, but we don't have that yet. That's what I got for you guys, unless you have questions.
Well, let's talk about building a brand new portfolio from the very beginning. And yeah, I want to diversify into 10 different sectors. Okay.
So
Yeah.
on
Thank you.
Friday, guys, we'll if unless you guys don't have a topic request, we can go deeper into these, or I can grab more of my charts. This was just the ones that I look at every day, but there's others that I look at every week that have a broader outline, but they still they're still important.
Cool.
And we'll do, Q&A and that sort of stuff. Always. I always like getting Q&As.
Groovy. Thank you, Signet.
So
Appreciate the time today. And
absolutely.
hope
Appreciate
everybody
you
can. Yeah.
giving us some insight on Linreg and volume profile.
Yeah. Yeah. Now, if you're interested, by the way, final parting thought here. Volume profile is not the same as volume TPO, time price opportunity. And there is a webinar video up in our webinar group there where I discuss the difference between volume profile and TPO charts. They look the same, they're not.
Absolutely, they are not.
So if you're in, that's a different topic there. But anyway, Signet, go do your thing, man. Appreciate your time today. And we'll holler at you next time. Hear your briefing in the morning.
Yep, I'll see y'all in the morning.
Thanks. Later. Okay, Signet is out. Close the stream.